Well, welcome back to Finance Uncut. On today's episode, we have a different format for you. A student or turtle of mine, Sam, who's an engineer by trade and a young investor, is going to host this chat, which we're looking at doing every couple of weeks. So if you guys like this format, don't forget to hit that like button and leave a comment below. And if you guys like it, then we'll continue to do this kind of format every couple of weeks. So with that, let's get to the chat.
Hey Steve, how you doing?
Yeah, good, Sam. Yourself?
Yeah, pretty good, man. We're right here on the Zoom, and I just wanted to ask you a few questions. What's going on in the markets, and basically just get your insight with what's going on in the world today, in America and in Australia. And yeah, just want to get your insight.
Yeah, man. Looking forward to it. Should be a good chat.
Awesome. Just the first question. I wanted to ask you your macro outlook. And if it's still an inflationary one in the light of recent central banks stating that they're going to taper and raise interest rates.
Yes, it is. I still have an inflationary macro outlook. I acknowledge that there are deflationary forces in play. And I used to be on the deflationary camp. But I really hate this inflation-deflation debate. You're either a deflationist or an inflationist, and I really hate that because you'll see some people, they've been deflationists their whole career, just about. Other people who have been inflationists their whole career, and I just like to look at the macro, look at the economy, look at what's going on. Is it inflationary or deflationary? I don't want to be ideological about this or be in one camp or the other. I'm an investor. I am here to, one, preserve my capital, and two, make significant gains. And so I want to try to get the thesis right. And so at the moment, yes, I acknowledge the deflationary forces. And my base case at this stage is that we do have inflation. We do have inflation, the original definition of inflation, which is the expansion of the currency supply. However, prices then are then determined by the amount of production or supply to the demand of that new currency. So I see what's the broad money, or the broad currency, that's been expanded over the last 12 months in particular. I've seen fiscal, there's a change that's happening. Fiscal has become more dominant. Monetary is supporting that fiscal system, if you like. All of a sudden now we've got this push for central bank digital currencies. And I think that's inevitable. And I think that's coming a lot sooner than we first thought. And so that's going to give the central planners the ability to send stimmy checks, directly to people. Don't have to go through the banking system. Don't have to, and I suspect that there will be changes to the, especially in the US, the Federal Reserve Act in Congress, and we'll see how that plays out. Now, I do acknowledge that if central banks, I've said this in some videos, you need to look at what central banks do, not what they say. Some say that the central banks are really just a PR firm, and they try to talk the market into going one way or another. So watch what they do, not what they say. What, 0.5% interest rate rise in 2023? Are you kidding me? What if CPI is high single digits or low double digits? So I still think it's an inflationary environment. uh, look, if central banks were to lift interest rates, and look, to be honest, and I'll be fair, that they wouldn't have to lift interest rates all that much to cause a problem with our debt problem, because we have a debt problem, both from a government level, a corporate level, and a household level. We've got a debt problem, and at the moment in the small caps, the Russell 3000, I think it was about 30% of those companies are zombie companies, meaning their earnings can't even pay their interest payments at these record low rates. So the bond rates, so the junk bonds, I think I saw a chart the other day that there was a junk bond rate that came out under 3%. I mean, this is just ridiculous. So, you know, that they can't even make their interest payments, let alone principal payments. So, you know, and household debt, buying property all around the world. It's an Australian problem, a US problem, Canadian problem, UK, you name it. So I do acknowledge that. And so here's my base case. I think we have significant inflation over this decade, definitely over the next few years. I've got a video coming out shortly with an update from Professor Richard Werner on his hyperinflation claim. So people might be interested in seeing that video. But yeah, if they do raise rates, I do acknowledge that asset bubbles are likely to crash. Okay, but don't forget that, you know, having inflation doesn't say that you've got a healthy economy. It doesn't. It doesn't. But it also doesn't mean that asset prices go up, because in 1973-74, we had the stock market fall 50% in nominal terms, yet we had CPI at 12.5%. So I do see something like that playing out, where we do have high consumer price, the CPI, and if central banks do what they say they're going to do and raise interest rates, then I do see asset prices crashing, housing, stocks, bonds, you name it. However, I've shared in other videos as well that, you know, gold in particular does well in those environments. So yeah, so I'm still on the inflation camp. I don't like being pigeonholed as a, you know, inflationist or you know, whatever, because I would happily jump ship if the macro tells me to jump ship.
Yeah, you're talking about inflation there in the house market, and I know some people out there talking about, you know, getting another house, getting a mortgage, especially in the last year. What would you say about that, and where do you think the house market is going to be at, or like around in the next year or so?
Yeah, look, so my business partner and I, when March last year, you know, we shorted the stock market. We shorted different stocks, and it made great gains in about 2.5 weeks. But as we were going into lockdowns, especially here in Australia, you know, we were looking at mass unemployment, and we were extremely bearish property. We were in the camp that we were heading for a 30% fall over the next 3 years in property, because property don't fall like it does the stock market. So you look at the US market when it crashed during the GFC or Ireland, it took 5 to 6 years for that to crash from peak to trough. So I was in that camp. All of a sudden, the government came out with wage subsidies, you know, and, you know, through JobKeeper, increased job seeker, the unemployment, significantly as well. We also had a moratorium on mortgage repayments. So you could pause your mortgage repayments and not pay them. So people that might have needed to sell didn't have to sell. And we've seen that in the data, that the supply of houses for sale have fallen through the floor. So there's less supply on the market. We also, yeah, so wage subsidies, But then the government came out with Home Builder, so a government scheme for anyone to buy a new home, which was $25,000 on top of state government grants, which range anywhere around $15,000. And then if you buy in a slightly regional area, there's a little bit more. So the government allowed you to take $10,000 per person out of super in the 2020 financial year, so just before June 30 last year, and then another $10,000 just after the 1st of July per person. So if you're a couple, effectively within a couple of days, you could take $40,000 out of your super fund, out of your retirement account. So if you're a first home buyer with no deposit and pretty average job or something, or maybe you're on JobKeeper or whatever, you can take $40,000 out of your retirement, get $40,000 or $45,000 in these government grants. All of a sudden, you've got $85,000 deposit to buy a home. And so the government has brought forward so much demand in the years ahead. Brought forward so much demand. My question, I've got a couple of questions. Where does the demand moving forward come from? Because we've pulled it forward so much. Because our borders are pretty much closed. Our immigration is next to nothing. And we had high immigration rates before that. So one solution is we just open the borders and allow so many people in to keep that demand going. I don't see that happening though, with the the cough. And yeah, Australia, like New Zealand, we were just locking down over 1 or 2 cases. In fact, as we record this video, we're in lockdown at the moment because what was it, 2 cases? I think
2 cases yesterday. Yeah.
2 cases. So that's cases. So they probably got a sniffle. I don't know. Anyway, I'm not going to go down there. We've got interest rates. So if you look at lenders, their 4 and 5 year fixed rates have been rising. You can't get a 4 or 5 year fixed rate under 2% anymore in Australia. So the banks are seeing that, that the longer end is, we're looking at higher rates. Well, that's the talk anyway. With the amount of debt levels that we've got, the household debt level, we've got mortgage stress at what, 41.3%, I think. So 41% of all households with mortgages are struggling on a cash flow basis. In fact, they're negative on a cash flow. That's not sustainable over the longer term. And so if interest rates do rise, then I'm afraid the first casualties will be the more recent home buyers, because they're going to go into negative equity. Ones that don't have sound employment, those that are struggling in mortgage stress, they're at risk. And so at some point, people that need to sell will be forced to sell. And then we'll see what that supply demand ratio works out. Because at the moment, you've got no supply and you've got significant demand from all the government stimuluses, payments. Also, due to lockdowns, people are looking to relocate. So yeah, there's a lot of questions there. And so for me, I've been selling real estate into this bull market. It could probably go higher for a little longer. I don't know where the top and the bottom is in this thing. All I know is, in my opinion, it's overvalued and there's better value in other asset classes. So I think the risk reward isn't there for property for mine. There's too much risk versus the very little reward.
Mm-hmm. Yeah, I'll just go straight to the next question. With your macro outlook, how do you position yourself with the macro outlook, and can it change?
Yeah. So obviously I'm heavily invested in gold and silver. For me anyway, this is for me, so we don't give financial advice on this channel. But for me, I hold a significant portion of my portfolio in physical gold and silver. And that's my insurance. That's my protection of my wealth, my protection of my purchasing power. And I've shared in other videos. I have that stored in 2 vaults, and then I have some that I've got close access to if the you know what hits the fan. I then, once I'm comfortable with that size of my physical holdings, the only time I kind of add to that is when some coins go on special, and I've got a bullion dealer like 2 streets away from where I live. So I just pop in and buy some coins just for fun. So I don't really add in a significant way to my physical position. I then pour into the gold mining and gold explorer space, and the silver mining and silver explorer space. I also have other commodities that I think will do well in this inflationary environment, but also probably, and even more important, this move to a green economy. Electric cars, we see it's really being pushed through Europe and Britain at the moment, but also one of the political parties in the US and also here in Australia. You know the debate that's happening around that and the whole climate movement and whatever. So I'm also looking at pitching my wagon to benefit on that. So, you know, things like copper, nickel, zinc, you name it. I'm invested in that. And I like investing in that sector because you can work out, you know, in the producers, for example, you can work out what their cost base is. So you know what the price of the underlying metal needs to be for them to produce free cash flow. And, you know, then there's a few other things. There's more to it in you know, valuing or picking the right gold and silver miners. But I also, on some of these, I trade out of the money covered calls. So I just produce more cash flow. And so I love that strategy. And I love riding that out. In the explorer space, you know, there's more risk there, but there's more asymmetric gains to be made. And, you know, I've done quite well in that space. At the moment, I'm continuing to add to my existing positions. There's a few firms. I've got a mining conference coming up in a couple of weeks in Noosa, which is a beautiful part of the world, about an hour and a half north from Brisbane, you reckon, Sam? Yeah. Yeah. So, and I've got some meetings with some other explorers that I'm looking at, and got some tough questions to ask there. But yeah, so I do that to create that exponential gain, you know. So I'm looking with the gold miners and silver miners, the producers, that is, I'm looking at, you know, getting 2, 3, 4, maybe 5 times my investment, as well as picking up some dividends. And as I said, riding out of the money covered calls for extra premiums. But on the explorer side, you know, I'm looking at the minimum 10x. You know, I want to get 10x type returns, you know, even, you know, 50, 100x type returns. I haven't yet got a 100 bagger, so, you know, I'll be doing a celebratory video, I guess, when I get that 100 bagger. But I've had plenty of 10 plus baggers in the past and whatnot. So yeah, that's how I'm positioned in the inflation side of things. Even if there's deflation, I still think the fundamental move with the economy moving to a green energy, the industrial demand for those commodities. The other thing is food commodities as well. So I do have some positions in food commodities as well.
Just different question. Do you think gold or silver will ever be money again?
I would like it to be, because it's God's money. It's real money. It's man's money. It's you know, governments can't print it. You got to put hard work into mining it, to finding it, and then mining it and producing it and melting it down into a coin or a bar. So I'd certainly like that again. We might get to the point, look, governments don't like it because it puts restrictions on them. They can't promise all the goodies to people, free this, free that, vote for me, you get free everything. Central banks don't like it. Oh, in saying that, I've got a video coming up that I'm sharing with a senior central banker who actually said some really nice things about gold. So yeah, you'll have to wait for that video. I think ultimately at some point, if Professor Richard Werner and Dr. Michael Burry are right on their hyperinflation call, we'll be forced to go back to probably gold. We'll be forced to, because you need something to give people confidence, and gold has that, history, and every time it's gone back to a gold or silver type standard. Look, even the deflationist Brent Johnson says that ultimately we're going to have to go back. The monetary reset, it'll be forced upon them, but they're going to have to go back to some type of anchor to gold to give confidence. I don't know if you've seen in Lebanon at the moment, what's going on in Lebanon. There's mass rioting, breaking into the central bank there, wow. Gunfire everywhere, all sorts of stuff, because they're having a massive hyperinflationary type environment, and people can't get food, people can't get fuel for their motor vehicle. There's actually a lot of footage of what's happening over there right now. And if anyone doesn't follow Steve Henke, Professor Steve Henke, he's a monetarist, so he's not an Austrian like us, but that's fine. That's fine. I like my monetarist friends. They're good people. They do believe in the free market and whatnot. Yeah, he's been doing a lot on what's going on in Lebanon at the moment. So, and this is what happens. So if we get to that type of environment, Jim Rickards calls it chaos. Doug Casey calls it financial chaos. Then the only thing that can solve that is to bring confidence back into the currency, and for mine that's gold or silver. So do I think it ever will be money? I think when we have that financial chaos, they'll be forced to. When that happens, I don't know, like Michael Burry and Professor Werner are saying 2023. So that's only, that's 2 years away. Others like Jeff Gunlock, they think by the end of this decade. Stan Druckenmiller, 2035. So I guess it's not too far away. But yeah, no, we'll see. We'll see. Central banks and governments won't want to give up their power to create unlimited amounts of fiat currency.
Yeah, you did a video, I think it was a few weeks ago, on wealth cycles. And you showed how you made big gains and all that. Where did you learn about wealth cycles, and do you think it can happen again?
So I had a bit of luck. To be fair, I had a bit of luck. I bought into silver in 2008, 09. GFC hit, silver went on a massive run. It was funny because back then I was listening to a lot of Robert Kiyosaki stuff, and but I hadn't heard of wealth cycles, didn't understand it. But what Robert Kiyosaki was saying, it was, and others like him were saying, you don't measure gold and silver in dollars or in currency. You measure it against, assets. And so my mindset had to change a little bit when I heard that, because, we've been brainwashed to measure everything in dollars, in currency. So when silver ran up into 2011, in early 2011, I had I think it was a Scottish guy, came into my office, just random guy. I don't know how he got my details, and was talking about US property. But all the properties he was showing me were all in Detroit, and the yields were unreal. Like, some of these properties were yielding 30+%. But I had also been watching, enough news to realize that Detroit was not the Detroit that it used to be. And I just happened to be talking to a colleague of mine, and she said, look, one of my colleagues in Melbourne has actually been buying US property. Maybe you should have a chat to him. And so I did. I had a chat to him, and he actually bought some property in Toledo, Ohio. And boy, don't I have some stories about that. And then Dayton, Ohio, as well. And I've been to Dayton. That was an interesting trip. But then he bought in some good areas. He bought in, down in Florida, bought in Atlanta, Memphis, and so forth. And so, I then went, wow, I've done so well in my silver. Look at the property prices for these investment properties. And so I started selling my silver, and at the time the Aussie dollar was at $1.04, so it was above parity. And so I over a few months there, I transitioned to selling my silver and transferring it to my Wells Fargo account in the US, and started buying property, which was great. My first property I bought in Atlanta, it was a 3-bedroom, 2-bathroom townhome for $29,000. So, so I've been selling those properties significantly. Most of them have tripled in price. And so since I bought them, and the dollars, look, like I was bringing some of that back when the dollar was under 70 cents. So I also made on the currency there. So the dollar's about 75 at the moment. But there's some risks that the dollar can go lower. So I'm still sitting in US dollars. I've still got a couple of properties in Memphis. And I probably won't sell those ones. They're little cash cows. They didn't crash much in the GFC, and they haven't gone up much. But they're little cash cows. They're good little passive income earners. But I still have US dollars in the US, because I think Brent Johnson's dollar milkshake theory, it does make sense to me. And so I've got a little hedge on that play, that if that happens, then that should do well for my position in dollars. And frankly, Jim Rogers is the same. So do I think wealth cycles can happen again? Well, I'm doing that now. Yes, I believe that it can happen again. So I believe that gold and silver is undervalued, and I think gold and silver in the next couple of years. So, I've definitely got an outlook to 2023, and then we'll measure things. Look, I'm always measuring things anyway, but I'll measure things. I'm looking at holding my positions out to 2023, and then looking at other asset classes, looking at where property is, looking at where certain stocks are. Do we have a crash in those markets while gold and silver either stays where it is or goes higher? And then that's where I convert. So I'm looking at how much stock can I buy with my silver? How much property can I buy with my gold and silver? Does that make sense? So yeah, I do believe we're going to get that again, because I think other asset classes are severely overvalued and in bubble territory. So I'm definitely playing that again.
This is going to be the last question. Really quickly, what's your outlook for the remainder of 2021 for asset classes? Like, which asset class do you think will perform the best?
All right, so I'm going to do an update video on Basel III, because only some European banks, on the 28th of June, are now under Basel III. But come January 1, 2022, we got the LBMA and other banks that are on there. So, gold and silver could be just maintaining the trading range that it's at the moment for the rest of this year. If it goes high, if silver's above $30 by the end of the year, great. Actually, I don't want it to be, because I want to continue adding to my, my gold and silver mining and exploration positions. And if the underlying metal, let's say silver's $40 at the end of the year, my stock positions are going to be way higher. I don't want them to be way higher yet. I want to buy them. I want to buy more of them at these prices because they're depressed. They are so on sale at the moment. It's not funny. So, and the market, or some people in the market, think that this inflation is just transitory and that interest rates are going to rise. So, some people are like, oh, well, that's no good for gold then, or silver. So, but what's encouraged me about gold and silver is it hasn't crashed through the floor. It has maintained a very solid support where it's at the moment. So, but I think Basel III will have an impact over the next 12 months. And see, what we're going to see with CPI, in my opinion, is we're going to see spikes in the CPI. So the next CPI report may come lower, and then you'll have the deflationists come out and say, see, told you it was transitory. But then another one down the track is going to be even higher than what it came out before. And so next year sometime, I think if we see a CPI number that's high single digits, I think people are going to wake up and go, maybe this isn't transitory. Maybe there are some actual structural issues here. So, I can still see. So look, the Fed and central banks are continuing with their asset purchases. They're continuing to pump liquidity and base currency into the system. So, I can still see property and stocks going higher, even at these overvalued levels. I do see, though, a turn, and look, I'm not doing this. I'm not buying growth stocks. We've seen growth stocks really struggle actually lately, and the tech stocks and whatnot. Definitely, we're seeing a rotation into value. That's pretty clear to me. So I think it'll be value stocks that actually perform, because people need to invest. They need to park their savings, park their capital somewhere. And people are saying, well, look, the growth stocks are severely overvalued, can't get nothing in bonds. And if interest rates go up, then the value of those bonds go down. Look, gold and silver hasn't moved much lately, so I don't know if I'll go there. Property is extremely high at the moment. You need to take on a lot of leverage to even buy that. And, in Australia anyway, it's not positive cash flow, so you make a loss, and we have negative gearing and whatnot. So I think value stocks, people will look for cheap, undervalued stocks that will be less volatile. So I think for the rest of this year that they may outperform. I actually wouldn't be surprised to see oil as well. So some more commodities. So we've seen steel go vertical. Lumber's come back quite a lot, but I wouldn't be surprised to see oil hit 90, maybe $100 by the end of the year. It's a big call from where we're at, but I wouldn't be surprised to see that at all. So there's still some commodities that I think have got some upside. I think commodities have had a real good run. They've eased off a little bit. But I think oil, I'm saying oil and value stocks. There you go. That's my pick.
Yeah, we'll see. We'll have to wrap up now. But really quickly, I see this book behind you on that shelf. What would you say is your favorite finance book?
My favorite finance book. So finance book, economic book, or investment book?
Yeah, economic book, investment, money book, whatever.
This is probably heresy to say, but Murray Rothbard's Man, Economy and State. This is probably, look, Murray Rothbard is my favorite economist. Ludwig von Mises is my second favorite economist. I know that's almost heresy, isn't it? But for investment books, I'm a big Joel Greenblatt fan. So here's one of his books. You Can Be a Stock Market Genius. It's in this book that I learnt about leap options and stuff like that. So, but just his value analysis and his cash, valuing cash flows and whatnot. So, yeah, look, to be honest, most Austrian economists are great. So really any of their books are fantastic. I love Joel Greenblatt. I love the way he is as an investor. That's very much my personality as well. So yeah, anything Joel Greenblatt and anything Murray Rothbard. Actually, Murray Rothbard's written so many books, some really small, easy to read books. If you're a new person to economics, just a little simple book like What Has the Government Done to Our Money? And I've got a few other little books here from Murray as well that I'd recommend newbies get. Actually, Henry Hazlitt's Economics in One Lesson is probably the book that I recommend people start off with. So
that's the one I've read.
You've read that one?
Yeah, it's really good. I really enjoyed that.
Yeah, nice. So, but yeah, anyone can go to the Mises Institute, the Mises Library, and they can download as many free ebooks as they want.
Awesome. All right. Well, thanks for that, Steve. I really enjoyed asking the questions, and yeah.
No worries, mate. I enjoyed it as well. Talk soon,
awesome.
eh?
Yeah. See you, mate.
All right. See ya.